Hey, good morning, everybody. Welcome to the Ankerstar Wealth Morning Show. Have three exciting topics for you today. First of all, pay raise time. Okay, not necessarily for all of our listeners, but if you are collecting Social Security, they did announce the Social Security COLA for next year, so you have to listen to see what that is. Again, that affects Social Security and other things like military retirements and other things that are pegged to the COLA, if you will. And then if you happen to hear a crazy story about Amazon and robots and Whole Foods, and I don't know what's going on, but Mike's going to break it down for us. It seemed like a cool article, but instead of clicking on it today, you can have Mike explain it to you because he's all over it this morning. And then lastly, he'll close with the CPI number that came out this morning as well, and then how that is affecting the markets. But before we begin, this is a financial education presentation. You have to do your own due diligence for acting upon anything you hear in this presentation. More disclaimer information is available at ankerstarwealth.com, and the opinions expressed are mine and mine alone. And a widely projected was this 2.5% cost of living adjustment officially now. Remember, in the past couple of years, we'll see if there's the actual chart. There you go. Of course, they have the big chart. We had the 2020, we had COVID, and then 2021, and then we had the big moves up after COVID when inflation was out of control, if you will, up over 8% that one year. And then last year kind of toned down, and then this year down at 2.5, where if you kind of go across the board, if you were to kind of average all those out, it's kind of somewhere between 2.5% and 3%, which does kind of track what the Fed is always chasing the 2% inflation, but not really getting there, right? So it's just kind of bebops around there. But there are also years when there's zero adjustment. So overall, is this good news or bad news? It's more of just it is what it is. Certainly, it's a big concern for all of us if we're not in Social Security claiming age yet. But approaching it, we need to make sure we take care of our senior citizens so they can continue to live. But as far as it's annoying for us when prices go up, but we also have incomes that could inflate up as well. But once you're past that income earning stage, then this could be your only source or your main source of income out there. So all in all is well. It was the expected number. So people like when there aren't surprises there. All right, I will stop sharing my screen and then hand it over to Mike for some Amazon news. What do you got?
Yeah. I mean, Amazon, one of the Mag 7, the big stocks, certainly in our models at the more aggressive levels. And we love being owners of innovative ideas. And we also love being owners of companies that, continue to expand their market share and delve into other areas. So when Amazon, before I share my screen, when Amazon bought Whole Foods a few years ago, and you're thinking, Amazon's getting into groceries. How can they apply their technology and their obviously massive distribution model in impact the groceries, where they're going to start competing with the likes of certainly a Kroger, which would be around Cincinnati, headquartered there, but Walmart, there's a big grocery there. So, and here is, I'm going to share my screen. Here is something they're putting in. So think robotics, think AI, and think distribution. And you start to see where Amazon could take this. Now, will this totally work? We don't know. Whole Foods, I'm not a big shopper there. Maybe I should, since I own Amazon stock, but I'm just not a big shopper anyways. But as far as, here's what they're doing. They're going to add, or they're experimenting with adding mini warehouses to their supermarkets. And these mini warehouses would have products that are common, and you're going to hear like Kellogg's cereal and some other ones that they don't typically sell there. But then if you click like, I want this, it will be at the register when you check out. So, whether this works and whether it is really a competitive advantage across other, the Walmarts of the world, we'll see. But like they said, items that aren't carried at Whole Foods, like Pepsi soda and Kellogg's cereal. Like, I didn't know that they didn't carry those. I don't do enough shopping to know, but I like the idea. So, and I don't know, Steve, I don't know how you have your groceries. we either go pick ours up at Walmart where they have them already picked for us and you pull up the car, or occasionally we also have them delivered to our house. Costs a little bit more, but saves you a lot of time. To me, it's the savings of time of not having to walk around a Walmart or a Kroger and like try to find stuff. It's just like click, put it in there. It saved me an hour. That's worth something to me. How about you? How do you do your groceries there, Steve?
We are old, and therefore we are old school. We go to Walmart, and we have HEB down here. Sometimes that's an option for us too. But I drive the cart, and Irene shops until that thing's full. So that's kind of how we do our grocery shopping. We do that, and everything else it seems like we have delivered to our store. But we still do the old school pushing a cart around the store.
Well, that's good. I'm glad somebody still does. When I do venture into Walmart to buy, some spinach or yogurt or whatever I'm getting, I do see the people that are picking the orders. Like they know where everything is. And if I do need to find something, I'm like, where's the blah, blah, blah seasoning? And they're like, oh, it's right down there. They know. But that has to be a rough job. So I'm thankful for that. And certainly, I always thought with the old school, you run into like, never go shopping when you're hungry, and certainly never go to Costco. Because if you're hungry, you will see so many things that you're like, oh yeah, I always wanted to try this. Or if you're at Costco, oh, I'll get 5 pounds of this, and you end up buying so much more. Where at least when you shop online, it's kind of like you don't fall into that as much. But anyways, we'll see. So anyways, that's news from Amazon. We will see where that goes. I kind of think it's interesting that we're seeing, you say take a Google, which now has some AI things on their search. So they're expanding into that. Take Apple and the AI on the phone. Take Amazon, they're expanding into the grocery business, or they have expanded into it. And it's just interesting to see that these businesses broadening out. Remember, Amazon originally sold books, and Steve and I pulled up our original bookstore list. Now we're talking about robotic groceries. Pretty cool. We'll see where it goes.
Yeah.
So the other piece of news that came out this morning, actually one thing I just want to show, here's leading grocery store market share from 2023. So, they're really venturing into the Walmart zone. And Amazon's always competed with Walmart as far as the online, but you can see that this is right in Walmart's wheelhouse as far as groceries. And there's a couple grocery stores I've never even heard of in there. So, we'll see where Whole Foods ranks here in another year or two. So yesterday we did our fourth quarter update. We had a lot of positive news. Jobs report from last Friday had been down, unemployment down, as far as good news. And then this morning we wake up and the inflation rate is 0.1%, just a tiny bit more than expected. And the jobless claims as far as unemployment was up. And of course they put the big highest since 2023. It's not crazy, but two kind of bad news here. One is the inflation not down, to 2.3 like they expected. And certainly we want the economy to do well. And as I stated on yesterday's video, and you may get that soon in your mailbox, the Fed cut the rates 50 basis points. So, they could have went 25, they end up going 50. And I think the Fed is probably looking at this now with the last week's jobs report and the inflation and probably going, we probably should have just cut it 25. I think when the minutes came out yesterday, it was not a unanimous, everyone's gung-ho cut at 50. It was more of a close vote one way or the other. So what this could mean for going forward is the next in November, when the next possible rate cut, I've already seen it's down to 89% chance, that's still pretty good, of a 25 basis point cut. So I'm sure the Fed's going to be looking at this. And so what I thought we'd do is look real quick, since the market just opened a couple minutes ago, and let's just see how the market's reacting. So, market's down a tiny bit. I mean, to me, a tiny bit is 0.2%, 0.3%. It's not a big sell-off. There's certainly concern, sticky inflation, weakening labor market. Friday it was strengthening. So this data comes and goes, and we look at it. I look at it every day. I'd say as an investor, you don't need to look at this every day. You probably shouldn't look at it every day. You probably have much better things to do with your time. But we will see where this goes. The one part I'd say that this is not necessarily good news is to the incumbent party going into an election. So, a lot of times people vote, how's the economy doing? How do I feel like we're doing? And if the labor market's weakening and there's still inflation concerns, those might be considerations. And just to take you back, how different 4 years ago. 4 years ago, all we were talking about was COVID, right? And now there's not even a mention of that. So, and I truly believe that, how the economy is doing is a major, for anybody that's, say, independent, that's borderline, there's diehards in either camp, it doesn't matter. But those people in the middle, it's kind of like, let me see how I feel, how the economy is doing. And this doesn't actually bode well for the incumbent party. What do you think, Steve?
No, I think it's the same way. And you've talked about it before, whether, the parties get credit or blame for things that are going on in the economy is just kind of, not necessarily tied to actual performance. It's more just the impression. But I will certainly say that those numbers plus, the inherent volatility going into the election, this could be hit new highs yesterday, but stay strapped in, right? Not expecting things to just keep ripping higher as we go into this. So.
Yep. And one of the graphs that I showed yesterday is volatility during October of an election year is probably the highest month. Volatility meaning ups and downs, not just downs, but, which always means buying opportunities, getting things on sale. And of course, we love getting things on sale. So we'll keep looking for that.
There you go. All right, everybody. Thanks for listening in today, and we will be back with you tomorrow. You have a good one. Bye.